Good afternoon. Today is Wednesday, September the 20th. The time right now in Singapore is 12:07 in the afternoon. Overnight, we saw the release of Canada's CPI numbers, which came in hotter than expected. Market was expecting year-on-year CPI to increase to 3.8%, and it came in at a hotter than expected 4.0%. Now, this does not seem like a lot because there's only a difference of 0.2% difference. But when we look at the CPI numbers going back to June of this year, just a couple of months back, the CPI numbers was only 2.8%. So when you compare 2.8 to 4%, there's obvious a resurgence in inflation going on in Canada. So this actually caused the market to think that the central banks in Canada is likely to hike interest rate next month when they meet. And this is on the background of the FOMC, which is the Federal Open Market Committee, having its meeting today and tomorrow. And this will actually cause some people to actually think that there may be some pressure to hike interest rates in the States, although market expectation is that they will hold interest rates stable this month without any increase. But most people will be looking at the language in which the communique will be released. Does it sound hawkish? Does it sound like it's going to be higher for longer? If that's the case, then it will act as a deterrent to higher prices in equity markets. So we can see here in the Dow Jones E-mini S&P E-mini Dow Jones itself, we can see that the last night we saw prices going down to as low as 34,608 from Friday's high of 35,358. We have a bit of a pause on Monday, but the market actually resolved to the downside yesterday's, and it does look like we may see lower prices going forward. And if this is the case, if the market breaks the lower support line here, represented by this blue gradient line here, there's a risk that the market will go back and test the 34,062. And if this level fails to hold, then we could be looking at something even more serious than just a simple pullback. And over in the S&P 500, we can see that the micro E-mini is also showing something very similar. The high traded on Friday was 4,566 even. We have a bit of a consolidation going on Monday, and then yesterday it resolved to the downside, although the market did recover back towards the end. At the low traded last night was 4,462 and a quarter, and this does looks like we're going to see an extended run towards the downside, targeting somewhere around the 4,400 levels. And if that's the case, I think the challenge at 4,350 is a real possibility here. So do watch out for further losses in equity markets. And over in the Nasdaq, we see that on Friday we have a high of 15,719 and three-quarter, a bit of consolidation going on Monday. Yesterday we see a bit of a pullback, but this pullback wasn't as deep as what we saw on Friday itself. The low traded was 15,248 and a half. So it does looks like for a time being 15,157 and a half seems to be the level that speculators are actually watching. If these levels gave way, then obviously the next level to look at will be the 14,609 and a quarter. Okay, so do look out for prices testing the lower end of the range. Okay, and over in Hong Kong, let me see where the Hong Kong market is doing this morning. And Hong Kong looks a little bit weak this morning. We can see that the high traded here was on September the 4th in the first week of September, and prices high was 18,898 in the futures contracts. And we have a bit of a rebound going on last Friday to 18,714, and now the market does appear to be trading the downside. And very soon, I think the market will take out the 17,539. And if that's the case, I think the market will be gunning for 15,900 levels, maybe as high as 16,900. So between the 1,000 point levels, the market may actually find a bottom. But from where it is right now at 17,900 thereabout, I think there is another possibility of a move to the downside by 1,000 point at the minimum. Okay. Over in the Nikkei, we can see Nikkei prices are pulling back from a high of 33,450 that we saw last Friday. So by and large, we are seeing a very similar structure in both US equity markets as well as Asian equity markets. We can see that after a drop on Friday, markets consolidating on Monday before it continued downwards. And a lot will be anchoring on what the FOMC statement is going to be like. Now, today we have UK CPI numbers, so we will see what those numbers will turn out. But I think there will be more UK specific. On the downside, I think if this market continues to trade to the downside, I think a revisit of the 32,170 in the Nikkei is a real possibility here. Okay, and over in currency, we can see that the dollar pulls back after an attempt to rally back to the high of 105.25, did not quite make it. Prices came back down, and then we have a late recovery going on in the States last night. And I think the market may not have seen its peak yet, but if the market goes into 105.30 to 105.90 levels, that level will be an area of possible re-emergence of selling interest. Do watch out for another attempt above the 125 levels into the 105.30 to 105.90 levels before it finally picks. At least for now, it's time for a more significant correction. So look out for a corrective pullback. And over in the dollar itself, we can see that the euro dollar attempts to rally may have a really peter out. The high traded overnight was 107.18. And I think this structure tells us that there is very little motivation to take the market much higher. I think eventually the market is going to drop back to 106 level. And I think this is going to be something that we can look forward to, especially in sync with the dollar index going above the 125 levels. Okay, so do look out for one more run in the dollar to the upside. Correspondingly, we probably will see another dip in the principal currency below most recent low. Sterling, because it is going to be looking forward to a CPI numbers today. Let's see what kind of number it comes out, but you can see that the market is getting ready to rally. But I think any rally to the upside is going to be quite limited, because I think the market structure suggests that over time, prices in sterling is probably going to go down to 123 levels to maybe as low as 121.5 levels. Okay, so do look out for this kind of drop, one more drop in the principal currency, including the sterling. Aussie has managed very well on a relative basis. Aussie has managed to recover from 0.6375, 57, sorry, all the way to the overnight high of 0.6474. Looks like it may actually continue higher into the 0.6500 to 6535 levels. So this is a big barrier to overcome. If you fail to overcome this level, it may actually come back down again. Dollar yen remains very well bid, and this is understandable because of the interest rate differential between the Japanese and the Federal Reserve's central bank's rates. You can see that as long as the interest rate differential remains, fundamentally speaking, the dollar yen is likely to go even higher. So top side, I think there will be an attempt to go to 148 mid levels to 148 90 levels. Let's see if this actually happens, and if the market couldn't sustain and come back down, that will be the signal to go in to actually unwind the position if you have any long position. And dollar Canadian have a massive sell-off last night because, like I said earlier on, yesterday's report of the CPI numbers in Canada see the Canadian dollars actually strengthen very, very rapidly because of the belief that the Bank of Canada have no choice but to high interest rates when they meet next month. And that caused the dollar Canadian to actually fell to a low of 133.79 before we see quite a significant rebound, and this rebound suggests that this low here may technically be in for now. So for the short term, the low at 133.79 overnight is possibly the low for this move. Market right now will be attempting to go to the upside. I think it will be capped somewhere between 135.40 to 135.90 levels. So this move upwards here is basically a corrective rebound, so do watch out for that as well. And over in crude oil has actually gone to a high here at $92.43 before it actually comes off. Now, in yesterday's update, I actually allured to the possibility of the profit taking coming in within this bracket of $91 and $93.74. And true enough, it did appear that the selling interest did appear, and profit taking was actually a one-way street as far as the New York session is concerned. The moment New York opens, the market has been going down in one single direction, and right now it seems that it may have hit its immediate level of demand, and that level is $88.29 to $89.37. This is basis the WTI crude oil futures. So do look out for some consolidation to go on here. We will see what happens beyond here. If the market do break $88.29, the next level will be at $85 to $86. Okay. And over in precious metal, there's hardly any movement. The market actually rallied all the way up to $1,937.36. This is on the back of the momentum that we saw from the low of 1900. So this market may not have hit its peak yet. I think the market may actually rally one more time into the 1,943 to 1,955 levels. So do watch out for another rally into this pocket of prices. What it does after that is another story, although the market has the potential to actually do a three-wave corrective rally all the way to test as much as $1,970 to $1,985. So that will be an equality move as far as this symmetrical three-way rally is concerned. Okay, so there's a lot more upside than meet the eye. So be careful to selling this precious metal, especially gold, is concerned. Now, silver have a slightly different structure. Okay, silver, although has bottomed out at $22.30, it has now hit a pocket of resistance at $23.48 to $33.60. So this is the where we are right now. Market yesterday high was $23.42. So there's a little bit of a resistance going on. It must punch above this level to have any hope of going to $24.90 or even $25.30. So by and large, I'm still bullish on precious metal as a whole, because if you look at the higher time frame, let's say I look at the daily time frame, you can see that the silver market may have actually a lot more room to go up. You can see the market is doing this right now. So the band of trading will be confined between $22 to $25.26. Okay, so this band of prices is likely to stay relevant for now. Okay. Now let's go back to the 4 hours and let's take a look at Bitcoin. Now Bitcoin has attempted to rally, and yesterday it was capped at $27,500 thereabout. And this structure looks very corrective. There is no momentum behind it. I think the market will be capped at 28,176. Likely whether it can break or not remains to be seen, but if there's going to be a break of this level, 28,176, and it cannot sustain and turn back around again, I think the market is going to hit lower. So do watch out for any kind of feint move, or we call it a fake out move, when the market challenged 28,176. Look out for a break, and then on a close-to-close basis, it must close above this level, failing which I think the market is going to turn back down, and that will be my cue to go back in to sell. Okay, so this is something that you can look out for. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye-bye.